is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 31st, terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, no problem. Do like Jay and John did earlier. They sent me an email at steve@tfnn.com, and inside that subject heading, they put radio show question. Of course, inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow off 200 and... Oh, what the heck did I do to my screen? There we go. It's off 214 points, trading out at 24,453. The S&P is down 11, 2712 is the print. NASDAQ 100 up 14 points, 6991. Russell down 10. Semis are off 2. Trannies are down 131. That's 1.2% to the downside. So that's the biggest loser, dollar-wise and percentage-wise, really. Percentage-wise, not dollar-wise. Spot volatility index not doing too much, trading at 1545. However, we have to go check to see where is the 50-day exponential moving average. Gold is down 40 cents, no big deal. Silver 2 pennies. Light sweet crude back $1.02. Let's go to the first two requests out here. And the first from John in Sarasota. And John's question was, he wants to buy the New York Times. I believe John is going to compete with Mr. Bezos. So he wants to know, is the New York Times setting up for a buy as we speak right now? So if we begin by taking a look at the 3 time frame charts, daily, weekly, monthly, and we look at market profiles, probably one of the things that John is looking at is he's saying, you know, Steve-O, price is coming down and testing the bottom of that bullish structured box. Bullish structured box, bottom is 2257. We're trading right now at 2257. So is this a buy in the New York Times? Well, how are we going to answer that question? We're not going to completely answer it from here. But, John, price should be at support. You haven't seen a close below the bottom of the box, 2257. Probably a day like today, you wait to see how this thing plays out here. See if it really does hold as support. What I find interesting, so as I take a look at this, slight nuance out here, is this box formed back on May 23rd, so sometime last week. And price came down and tested the bottom of that box, John, on May 29th. Yesterday was really just a sideways move. So in this bullish structured box, bullish in structure because of the mere fact that the center line closer to the bottom than to the top, buyers are the ones that should be in control here. They really didn't exert their influence 2 days ago, nor did they really do it yesterday in a market that was, well, fairly well to the upside across the board. And that makes you say, why didn't the New York Times move higher? So here's what we're going to do. Because it hasn't exactly hit support and jumped out of here, you're going to be patient. you're going to see if this level holds, at least based on this chart. Because if it doesn't, well, then we go to the weekly time frame. And John, it says maybe the buy is at 2078. And if we take a look at a monthly chart, it says maybe the buy is at 2132. So I would wait. Of course, somebody went out and bought it while we were just talking about it because price was down. Now it's up to 22.63. Hey, we're only talking 6 pennies out here. John, I don't think that was John. Let's go take a look at one of our other time frame charts, or not time frame, one of our other tools out here and see what kind of message we've got. Aha! Aho! Ahoy matey. So, John, we're dealing with price being down at support, but we're also dealing with a price oscillator at 0. And the price of the stock right now is below Stevie's red line, which is 2303. So it's very possible that what we have is a falling price oscillator below 0, and it's going to bust through that support level. What we don't know is just how far down it's going to get to. On our daily time frame chart, it says maybe not much more, but maybe out here, and that's at about the 2215 level. What I would do if I were you is I would just simply sit tight. Let me look at the weekly time frame chart for New York Times out here, utilizing Stevie's other tools, see if there's anything else. It's a big range out here, that's for sure, which would be all the way down to about 17 bucks. I'm not saying that's where it's going, John. It would have to bust through 2078 in order for that to happen out here. But I'm not seeing any reason for you to rush into the New York Times today. So I hope that that assists you with the my tally, my suggestion, which is don't buy the paper if you want, but don't buy the actual paper, if you know what I mean. Thanks for writing in. Much appreciated. We also had a question, and this was from Jay. Jay wants to know, he said, would you take profits in keys? Keys. So let's go take a look at KEYS. This is for Keysight Technologies, Inc. And you'll see you've got, do you have a different reading when we take a look at the daily, the weekly, and the monthly profiles? Well, first of all, no. It's bullish all the way. And so the question may perhaps a reason, now I don't know where John is in on this equity. No idea if this was a trade, if this was an investment. And so we really have to take a look at it, I guess, from a couple of different angles. The month is coming to an end. The week is not, but the month is coming to an end. If we take a look at this monthly chart here, is there any reason to exit this trade? KEYS. I don't see one just yet, but let's do this here. Let's also come over. Let's put in keys, KEYS. Let's go ahead and change this. Now, the weekly is going to pop up on our screen. Boy, that's a very strong looking. Now, that's not where it's trading at. It's 59.35 right now. So my system kind of has to, wait for the data feed to get in here. 59, where is it trading? Oh, it is. I take that back. It is trading at 59.34 out here. And this is the monthly time frame chart. What I wanted to do, Jay, is just do a little wave count, see where we're at. Boy, you already exceeded G way back here. So I don't see anything on a long-term basis. If you're a long-term holder of this, there's absolutely positively not a single reason that Stevie can come up with why you should exit KEYS. When we come back from this break, oh, I see my charts decided to give me a problem here. We'll try to finish this off. Of course, I want to look at what you want to look at, so give us a call or send me an email, steve@tfnn.com. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, Dow's off 216, S&P down 12, NASDAQ up 17 points. We're taking a look at ticker symbol KEYS, that's Keysight Technologies. And the question was, would I go ahead and sell it? So we've already answered the question. Long term, the answer would be no. Intermediate term, the answer would be no out here. It's really strong. Intermediate term, I'm looking at a weekly time frame chart. Volume this week is 9.3 million shares, taken out a prior swing point with 5.7 million shares. I wish I could use my other set of tools, but something is corrupt. The only way for me to do that is to shut everything down. It's really hard to do during the middle of a radio show and then come right back up. So can't do that. So I'm without that tool, which would help me, Jay, to see if there's anything out there that would be a warning shot across the bow. At this stage, we'll go with the tools that I have, and I don't see it. Even on a daily time frame, look, this is a very bullish day's candle. Maybe you're concerned because it's sold off a bit from the high of 62.41, trading right now at 59.84, but you've got volume behind this move out here. Maybe it is you're worried about the gap, and, that's nothing more than a breakout. So whether this was completely filled in, much like the weekly chart is, because weekly chart shows what that candle in essence looks like out there. So if you were looking at this candle, this is the week, would that have you at all concerned? The answer is probably not out here. It's when you look at it like this, right, and you take a look at the daily candle, your mind, because we're all visual, not all of us, but most of us are visual when it comes to assessing things, making decisions, learning, all those types of things out here, you're like, what do I make of this? So I get the question. And that's why it's always good to maybe take a look at things a different way. So as we speak right now, my answer is no. I don't see any reason to sell Keysight Technologies. But if you got into this and it was based upon a trade and you were just playing, for an example, the A to B equals CD pattern, this, by the way, is what it looks like, then what you'll see is, in essence, that has completed or close to completion. That was 63.31. Again, no idea what your strategy was, but I don't see a reason to sell it. And I'll always caveat it like this. When you're asking the question, should I take profits? There's never anything wrong with taking profits. And here at TFNN, we see there's a number of ways to do it. Close out the entire position. Take your capital back, right? Just simply leave free shares in there, especially if you had a longer-term outlook. Imagine a portfolio where everything or the majority of what's in there is, in essence, free shares out there. Just think how you would ride the ups and downs of the marketplace. So, something to think about. We have another question. This one, and thanks for sending these questions, folks. It makes it so much more enjoyable for me to actually do the show. The show just whips by. I get it. You can't call in. It's not convenient for you to do that. But sending a quick email, letting those fingers do the walking, or inside the Tigers Den. Talk about fingers doing the walking. You're right there. Boom, boom, boom. So let's go take a look at what Tim wants to look at. Tim wants to take a look at ticker symbol PDFS. Don't think I've ever looked at PDFS. Does it look like PDFS has put in a low? And would this be a good entry point? Well, a low. Do I have the right thing? A low. A low would have been back on May 9th. Did this put in a low? Okay, so the low, would have been back in May. But that's okay. The question is, was there a low back in May inside of PDF Solutions? Geez, I use these guys all the time. So we don't have all the tools that we need. I wish I could do a quick wave count and see if price was moving lower, doing less relative energy. Let's use the tools that we have. There's still plenty of tools out here. If we take a look at the daily time frame chart, then the answer to your question is yes. Because yesterday we saw price close above the top of the box. That was 1239. But it's not so much that it closed above the top of the box, Tim. It's the mere fact that it closed above the top of a bearish structured profile. Now, on this daily time frame chart, it's a nice little cool little nuance here. This equity really began moving down. Now, I can go all the way back to the previous high on my chart, left side of the screen, November 30, 2017. I get that. What I want you to really focus on and pay attention to, and it's a really cool use of the market profiles, is go back to January 10th, 2018. Notice that we've never seen a close. We've seen a test. That was back on February 15th. Oh, I take that back. I was going to say we hadn't seen a close above the top of the box, a daily box. We did actually see that in March for a period of 1, 2, 3, 4, 5, 6, 7 trading sessions out there. But it's an idea that it suggests, that there is a turn. This is a bearish structured box out there. It's a strong move. Now, today's coming back and testing the top. 1239 out here. Let's see what the weekly time. The weekly time frame last week closed above the top of a weekly box, and we've tested and rejected it this week. So and now what you've got is you have absolutely a key reversal session on a monthly time frame. Today is the month, and it looks like pretty much at the. Although I can see that's not going to truly be, well, let's go measure it and make sure, but does not look like to me a completion of an A to B equals CD to the downside, because that would have taken us to 815. You didn't get down there. But what we do know is we do know where the bulls are hanging out. There was a hammer candle on a monthly basis back here on January of 2016. There was about 2 million shares. This month we're at 4 million shares. So you're pushing into it with volume, so to speak. But at this stage here, this is support. It is clear support. And prices held support again from a monthly standpoint out here. So with regard to PDFS, the answer is yes. It looks to me like it has formed a bottom. And your trade, that's the dangerous thing here, because your stop, you just have to use proper position sizing. So the reality is, your stop probably, if you're going to try this, is take 47 cents. That's the average true range over the last 10 days. Let me make sure that nobody has messed with my tool. The only one that could have messed with it would have been me, and I did not mess with it. So the average true range over the last 10 days is 47 cents. Multiply 47 cents times 1.618. That is the stop. That is the minimum stop that you need to use out there. So now you know what the stop is. Take whatever trading capital is you're going to allocate, or the free trading capital in your account. If you're going to risk 1%, let's just say it's 100 grand in your account, 1% is going to be $1,000. Take $1,000, divided by that stop, which was 47 cents times 1.618. That's how many shares you should buy. The only caveat there is multiply that number of shares times the entry price. If on an individual stock it exceeds, let's say, 10% of your total portfolio, you don't need to risk 1%. Don't have the individual stock like PDFS representing more than 10% of your portfolio out there. That would be the caveat. That's how I would trade it out here. So thanks for writing in. I hope that helps you out. That's how Stevie would view PDFS for Tim in, I'm not sure where Tim is at. Okay, Chris has written in with a question. Now, this is ideal. And as we take a look at Chris in Montana, his question is, Steve, thanks for talking about the euro yesterday. Can you talk about crude? I'm short right now. Uh-oh, you're short crude oil. Uh-oh, Chris, I might tell you to be concerned about being short crude oil. But look, that's the way I felt at 9:30 this morning. It's now 1:30, 3 hours later. Let's go see if Stevie feels the same way for Chris in Montana about being short crude oil. And we're going to do that when we get back from this break. This is Steve Rhodes with TFNN. We've got the Dow. She's trading down 218 points. S&P down 12. Light sweet crude trading at 66.78, down $1.43. We're going to go check to see if it's trading into support, or has it broken it? Maybe it is best to be short light sweet crude. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 200, S&P down 12 points. So we're taking a look at light sweet crude. That's straight out at 66. Oh, 66.66. It is the devil out here. And the question is, should our listener, Chris in Montana, stay short? Here's what I'm going to be able to provide for you. And it really comes into play, I would say, tomorrow, which is and it's really coming into play today, which is the TAS Weekly Profile. It's a brand new weekly box that formed out here. Bearish in structure, but it's already accomplished its outcome, its objective out here, which was getting down to test the bottom of that box, which was 66.26. So we're trading at, looks like 66.72 as we speak right now. And if you're watching this on Tiger TV, you'll also notice that was the right-hand panel, the weekly time frame chart. If we switch over and say, what's the message of the daily time frame chart out here? Right now, just simply from the mere fact that you have 3 higher lows on a daily basis, meaning you had the low that we first had was back on the 29th, 2 days ago. Then you had a higher low yesterday, and now you've had still a higher low today. Why don't you watch that as a something to think about factor? Today's candle session, not over, so maybe we don't have a higher low. It has turned orange. What does that mean? That means that tomorrow, doesn't guarantee it, means that tomorrow we should have a brand new profile on its daily time frame, likely to form below the lows of where we're at today, but the low of the profile of where we're at today. Let me try to properly state that. And then you would have some additional new levels of support or resistance. Do we have any reason to really go ahead and close out that position other than this, other than these factors? There's a new profile that formed. It's a bullish in structure on a 240-minute basis. Bullish in structure, again, the center 67.28, the bottom 66.58, the top 68.67. I'd stay with the short. I'd let it prove itself to you. I'd use this profile and say if we saw a close above 68.67, remember, a new profile can form at any time. But this is brand new within the past, 4 hours, 8 hours out here. I'd be patient. If you see a close above 68.67, it's a couple bucks. I don't know where you're in on the short trade here. Then I would certainly consider closing it. But and I wish I could do something with other charts, other short-term charts, but I can't. Not that I can't. I can't because my system won't let me do that. But if we look at the daily time frame, it's a continuous contract. Even if I try to change to the current contract out here, I'll get a bunch of zeros, and that's not going to work really well. But let's say that your short is correct. Price breaks through support out here. Then I would anticipate that price would pull back to the March 16th low, and that's 61.08. So right now you still have a pretty good reward risk to stay inside this trade out here, and I hope that helps you. But they'll pay attention to those market profiles. Pay attention to today's slightly higher low than the prior couple days out there, and if you stick with the trade, pay attention to tomorrow's low. See if you've got a fourth one. But more importantly, hopefully we can look and identify for you a brand new daily profile on light sweet crude. So, Chris, thanks for listening. Thanks for writing in. Much appreciated. Looks like we're out of questions out here. Halfway done with the show. I guess that. Oh, I take that back. Joseph C. writes in, do you think Google can hit the 1118 level next week? If we take that out in volume, I have a measured move to 1170. What are your thoughts out here? And he's long some July 1100 call options. So, Joe in Boston. Joe, are you a juicer? Do you know Joe the juicer out here? Been in just killing time. Let's go take a look at Google. I used to do a lot of juicing. Probably should go back to doing some juicing out there. And that was brought to us by Joe the juicer. All right. So if we take a look at Google, I got a lot of lines on this chart out here. Let's get rid of a couple of them. And you're asking specifically, will this get back to a 1118? 1118. Yeah, I know. I said it a couple times out here. It looks like where Google can get to right now is perhaps it can get to 1110. And above that, Well, 1137. So the 1118, where is that coming from? Is that coming from this gap to the downside on March 19th? No, it's not really coming from there. Is it coming from that? Can't be coming from there. I mean, it could be, but I don't think that it is. So I'm not sure where the 1118, but you're just asking, can it get to that level next week? Next week. I wish I had my other charts to take a look at for you. Let me do this. Come over here to our 3 time frames because I don't know what the monthly is showing for Google. So let me take a look at that. Of course, it helps if you type in the proper symbol. So you got 1137. That shows up on the weekly too. So 1101. So here's what you're dealing with right now, Joe. And we're coming to the end of the month. Today's the end of the month. And this is telling us from a monthly perspective that Google basically has hit resistance out here. And the resistance was 1101.84. That was the top of its box. And the formation of this box, again, I'm going to just turn off price. But you can see that it's bearish in structure. So it tells us that sellers should have control of this pricing area, which takes you down to 931. We haven't been down to 931. If today Google can close above 1101.84, then I'd say, okay, that's good because you have monthly close above a box. This is present for the last couple of months. So this says, okay, might be at resistance. The daily is really kind of saying the same thing. Now, it's saying the same thing because of this gap to the downside on May 15th. So let's open up this chart again. Let's put a red line across that. And let's just try to anticipate volume metrics and where we're at. So if Google closes below 1090.05, that is the high. Well, let me put this data box out here. That's the high of May 15th when price gap down with 1.4. You know, you're moving into it with volume. So that even though price would reject this area, and it's actually, no, it hasn't tested. This one's a toughie. And specifically, you know, you're asking by next week because one chart says we're at resistance. And that's the longer term chart, the monthly chart. And the daily says it's trying to get to 1110.75. But right now, as we speak, I don't see it being able to get above that level based on the information presented to us by Google. If Google presents us with new information tomorrow, then we'll have a different outlook for it. But right now, 1118. I just don't see it just yet. Watch 1101.84 today. Maybe the market has a nice flurry into the end of the month. You get it close above that, then you're looking at 1110, and then I could go, okay, at least 1110, and we'd have to take a look at volume. Maybe after that, 1137. So I hope that that helps you out. Thanks for writing in. Much appreciated. And let's see if we've got any other requests out there. I love when the request lines get full. We have none. So that means you, too, can write in during this breakout here because I'd love to hear from you. Steve at TFNN.com. Like everybody else, just put radio show question, even with the question mark, inside that subject heading, and we'll get right to your query. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So yesterday, we were taking a look at Micron Technologies. MU is the ticker symbol, and one of our listeners wanted to get into the equity, and we said, no, don't do it. And the reason we said, no, don't do it, was because we were comparing the volume from March 13th, 2018 to yesterday's volume because it was a test of the swing point, the same with the day before. So the volume back there on March the 13th was 142 million shares. It was tested a couple days ago with May 29th with 75 million shares, light volume. Again, yesterday, 84 million shares, light volume. Told you that buyers were not ready to bust out the high, so we said, no, this is not a buy. Price is going to pull back. What has it done today? Pulled back. It's actually slightly gapped to the downside. Now, volume right now is 66 million shares, and it's trading into the breakout area. Small breakout area, but breakout area nonetheless. That was May 22nd. And the volume there was 111 million shares. Now, I don't know, 66 million shares. I don't know what the end of day volume is, but it's probably a close call out here. And it's barreling back with more volume than it had yesterday as it was moving up to the highs, or it looks like it will. So that says, okay, maybe I want lower price. Now, lower price is, in essence, or the first areas of support. Are they going to be 58.15 or 56.47? I say because it's coming back with volume, it's probably not 58.15. Maybe it's more closer to 56.47. But it can even pull back beyond that level because as we take a look at the weekly time frame chart, a bearish structured profile, similar to what we were looking at maybe in Google or I can't remember which equity out here, but we use them. And so on a weekly basis, you've rejected that swing point as well. Volume-wise, it was 481 million. This week, you've done 226. Even doing straight line math out here, it's going to be lighter on volume. So you have a weekly rejection, it looks like, on price and volume of a swing point. This would say you pull back to 55.65. That's at center of the box, the point of control. This is where both buyers and sellers are most comfortable with price out there. So the question is, hey, where is Moo headed to? I'm going to go with the 55.65 to 56.47 area first, and we have to come back if price is to, if it's going to do that. We want to just continue to pay attention to price and see what it is doing as well. So that was ticker symbol MU, Micron technology. We have a request to go take a look at ticker symbol BDSI, and this is for Bob in Spokane. Bob is long from 210. This is trading out right now at 260. Nice move there. That's a nice move out here. And the question is, can you look at this stock? I'm long from 210. Okay. So the daily time frame chart out here, what does this tell us? You're above the top of a profile. This then sets up for me, my eyes immediately gravitate towards the prior swing point. Others would maybe immediately take a look at a retracement out here. Prior swing point, by the way, is January 5th. 308 looks to me like where this thing is headed to. If we do take a look at retracements from that high on January 5th down to a low out here on May the 11th, you can see this thing is busting through the 0.618 level. So it appears. Once you get above that floor, you go up to the next floor. That says 278. 278, you get above that, you make that 100% move, you get back into that $3 range. So that's what I see as I look at the daily time frame chart. What it looks like to me is higher highs are coming. What else can we notice? You've got a nice little V bottom that has formed out here, so that is good. Last time there was a V bottom, it went back to the prior swing area. This one is probably going to do the same, get right back to that prior swing area. That says 308 is in the cards. That's the daily time frame chart. Maybe the weekly has a different message. The message of the weekly is prices targeting the top of its box. That's at 273. As we said, it's trading at 260 right now. Bullish structured box. Looks to me like at a minimum, you've got 273, another 13 cents left in this. Now, on a weekly basis, as it approaches that area, hasn't hit it yet, you've got a swing point from January 10, 2018. There were 4.3 million shares out there. This is hitting it or moving into that area, at least at this point, unenthusiastically. Is that even a word out there? Well, whether it is or it isn't, that's what it's doing. So it's not as if this has the volume metrics that you'd like to see on a weekly basis as it's moving into a prior swing point. But still, if this were to close above 267, light volume or not, you can go test the high. What's that high? 308. Almost sounds like a Abbott and Costello kind of a skit. I loved it. Wasn't it great to wake up on Sunday mornings and watch Abbott and Costello? Sometimes when I'm watching Meet the Press or Fareed Zakaria, or I feel like I'm watching Abbott and Costello. Really, it's not funny. It's depressing what those guys do out there. In any event, sorry, that was a side comment, but I still believe I'm going to write into Lauren Michaels because I've got a few skits that I just think are hilarious, funny as can be. And on Meet the Press, I want to be able to get up there and say, if it's Sunday, let's get depressed. And with our host, Chuck, I forget his last name, but you kind of know what I'm thinking about out there. That's too bad, because what a great show that is just simply gone, just down the tubes out there. Hey, wait, we're talking about biodelivery sciences. Don't get off track here, Steve-O. So 273 is what it looks like, Bob in Spokane. And on a monthly basis, monthly basis says, let's see what this thing was doing. Let's see if we can figure this out here. And so on a monthly basis, the swing point is right here. November of 2016, 12 million shares. You're basically testing it with lighter volume. So you've rejected a monthly swing point with light volume, which is what you like to see. You're trading above that high. That was $2.40. You're in a monthly bullish structured profile out here. So, are you in this for the long term? And I don't know, Bob, what your time frame horizon. You've got a nice trade. Certainly as a trade, you've made some decent profits. You're up, about 20% as we speak right now, give or take. But this does look like it wants to move higher. Doesn't mean you're not going to have some resistance. Next resistance level, though, going to be $2.73. So I hope that assists you with regard to that trade. And if I could hit the applause button, we would do that, because so far this has turned out to be a nice trade for Bob. That was ticker symbol BDSI. Well, as we stand right now, I have your targeting 3. There you go. You've got we do have some questions. Oh, they are coming in. I like that. Joe, you didn't write the radio show question. You just put Baba. Luckily, I know what it was you were referring to. So let's put ticker symbol BABA, Ali Baba. You're short Alibaba at 200. can't seem to get above that level. What's your take? So let's go take a look at Alibaba. Now, this is the daily time frame chart that we have out here. And let's get rid of this line right here. That's a yellow line. We're going to put a new line out here. You know, what it's been doing, Joe, is, really been trading with inside the profile box, the daily profile specifically. Let me turn price off because I think it's visibly easier to see what I'm talking about. So you're right, it hasn't been able to get above 200, but that's because it's had this bearish structured box up until today. So it had a bearish structured box, and the top of that box has held as resistance. Got a new box today. So I'm going to give you some new figures to pay attention to. Because if it closes above 200.38, then it's going higher. Now, maybe your stop is above that. So we come back from this break, we'll go take a look at that. Alibaba with Joe T. It looks like Clearwater, Florida. Look right now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So we're in the 2-minute countdown out here. Dow's off 235. S&P is down 15. We're going to try to answer 3 questions out here. The first is Alibaba, and our listener is short. And so at this stage here, your downside target is pretty minimal because price continues to trade above the top of weekly profile. So that is at least intermediate term bullish as we speak right now. If price were to close below 194.43, then we'd have something different. There's a brand new profile that is attempting to form. I don't know if it will form today or not, but this shows you that there's also support at about 195.64. This just simply hasn't shown any breakdown aspects of it. In fact, you'd have to come back and take a look at May the 4th out here when there was huge volume to the upside. There is lots of, there should be lots of support. We just took a look at TAS market profile support, and that trading session of May 4th, that ought to hold things up, and that's at 190.60. So I don't see Alibaba as a good short out there, not as of 1:55 in the afternoon. I hope that helps you out. Lee wants to take a look at, ask the question, is the pullback that's going on anything more than a short-term correction? And the answer, and I don't know which indice it is you're referring to, I will answer that question by looking at the S&P 500 and letting you know what it is that both you and I can see out here. And that is, the S&P priced in dollars, the right-hand panel of our screen, is in nothing more than a consolidation. Period. End of story. Anybody who tells you something else, just send them my way. You've got a consolidation that's going between 26.30 and 28.49, using our horizontal trading ranges. The S&P priced in euros hit resistance this month. This is a monthly chart that we're looking at here. And that was going to get up to the 23.28 level. At this stage here, that's where it's found resistance. So yeah, is it kind of just a corrective period? It's a consolidation period, Lee. Simple as that. The last question is if we could take a look at Lowe's out here. And with regard to Lowe's, I hear the radio calling me. But Lowe's looks like, as long as this continues to trade above 95.79, it's got resistance at 97.49. A move above that, it continues higher. Folks, thanks so much for being here. Stay tuned. David White is up next. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.